Well, a new year means it's a great time to look at your finances again. Chase Wilsey from Wilsey Asset Management explaining what investments to make in 2021. Chase, good morning and Happy New Year.
Good morning. Happy New Year to you as well.
Okay, let's get right to it. There are three options that you suggest can be very lucrative. Let's kind of have you run those down and explain for us if you can.
Of course, of course. So the first one I'm looking at here is financials. And financials, I'm really talking mainly about the big banks, which includes JP Morgan, Wells Fargo, Bank of America. And there's some key reasons why I think financials could do very, very well in 2021. You got to start here with, I do believe we're going to see rising interest rates. With rising interest rates, the banks are going to make more off of what's known as their net interest income. Very simply, as rates go up, that net interest income increases, beneficial for the banks. Another thing I'm looking at here for the banks as well is their share repurchase programs, their dividends. The Fed capped them last year as they were just struggling economy. Well, now what we're going to see is we're going to see an improving economy. And I don't know if we're going to get back to exactly where we were pre-COVID, but I think we can continue to improve upon that, which should allow the banks to increase those share repurchases and increase those dividends, which are big, big benefits for their shareholders.
All right, the other option here you mentioned infrastructure stocks. Tell me about those.
Yeah, so infrastructure stocks, I kind of make a little joke here. I think it is kind of funny because there's a lot of bipartisan support for infrastructure. Surprisingly, it seems like Democrats, Republicans can't agree on anything.
Well, there's one thing.
There has been a lot of talk on infrastructure, which should be beneficial to these stocks. And also, too, in particular, I'm really looking at U.S. steel manufacturers. The President Trump administration and then also President Biden's administration has talked a lot about U.S. manufacturing. I think U.S. steel stocks, that's another good place to look here as you look at 2021.
Okay, let's talk about real estate investment. This is a big one.
Yeah, and very important here, I'm looking at what we call office REITs, and REITs stand for Real Estate Investment Trusts. And what these do is these collect assets and they take those assets and invest in real estate. And very importantly here, you don't look at the private REITs. Those are ones that sell high commissions. They're illiquid. Look at public REITs. Those just trade on the stock exchange and you can go in and out just like a normal stock. The reason I'm looking at office real estate here, I do believe that it got hit pretty hard as we saw the shutdown in the economy last year. And it might be a little bit early to the game in 2021, but longer term, I really do believe that people need to go in the office. And it might not be your typical 8 to 5, 9 to 5, 5 days a week schedule, but companies still need to have that office footprint, which longer term, you'll see a return to that office should benefit these real estate investment trusts. It's a group I'm excited about, not necessarily for 2021 in the short term, but I think it can do very, very well over the next 3 to 5 years. Plus, these real estate investment trusts, they pay nice dividends, typically 4, 5, 6%, so you get a little income on the side while you wait for the price appreciation as well.
Okay, looking at investments for 2021, there's some things you got to be cautious and aware of. What are those?
So I'm going to start here with a traditional favorite, which is bonds. A lot of times people go to bonds for safety, but the reason I'm very, very worried about bonds, I was worried about bonds in 2020 to let you know, because I thought interest rates were going to rise. Well, now we saw interest rates fell even further in 2020. The reason that's a problem for bonds, as interest rates increase, bond prices decrease. They have an inverse correlation to them, so you got to be very, very careful with the 10-year note starting the year under 1%. I wouldn't be surprised to see the 10-year note in the year at 1.25, 1.5%, which is going to hurt a lot of fixed income investments.
And it's interesting because you're saying high-flying tech stocks, at-home stocks, that might not be the smart thing to do right now. And why is that?
So we know 2020 was very beneficial to these two groups. High-flying tech stocks, I'm really talking about companies like Amazon and Netflix and Tesla. These companies are trading at just extremely high valuations. There's a lot of expectations for growth as we move forward. I mean, gosh, you look at Tesla that trades at over 1,000 times earnings.
Wow.
That makes no fundamental sense. I'll tell you that right now. And yes, it had a very strong 2020, but things that worked last year don't always work in the new year. So I'm very cautious on that group. And in the at-home stocks, this includes names like Zoom and Peloton. They did very well as people, their whole lives revolved around the home. So you started the Zooms, you started getting the Peloton because, well, I can't go anywhere else to work out. So those stocks did very well. I'm a little bit nervous that there was a lot of demand pull forward, I'm saying, where now that growth is going to be slower in the future years because it happened in 2020. So just two other areas I'd be very, very cautious of.
Oh, you're sneaking into my life now with the Pelotons and the Zooms, and that's every day for a lot of people. Chase Wilsey, we thank you so much for the great advice into 2021. Happy New Year. Thank you.
Happy New Year to you as well. Thank you.
All right, a Northern California woman warning people about an online shopping scam. As Rowena Shaddix tells us now, a man claims